Hey, good evening, Facebook. This is A.L. Johnson with A.L. Johnson Life Insurance Agency, and this is another edition of our Small Business Highlight. And so this week we're highlighting Miss Ryonda Hall. She's the CEO of OCD Financial, and she's going to help us understand all things taxes today. And so, how are you doing today, Miss Hall?
I'm doing well. Thank you very much for having me.
Good, good. And who's that young man sitting next to you?
This is my son. This is my and first employee of the business. He's been with me for a few years, but this is my son, Michael Hall.
Oh, hello, nice to
How
meet
you
you.
doing, Michael? Nice to meet you.
I'm good, good. Nice to meet you as well.
So what's that like working with your mom? How are you enjoying that?
It's a really good experience. She wanted to really bring me into it so I could not just be an employee, so I could learn kind of like the game of taxes and trying to be an entrepreneur growing up. Because it's something that can benefit me all throughout life and just a little thing that I can take with me after I graduate. So it's really good learning all the experiences and just working with my mom also. So it's a great bonding thing as well.
Well, I can tell you're a sharp young man. You're hopping on here. You're speaking with confidence, very clear. I know you're proud of him, huh, Miss Hall?
I am. I am. No doubt.
Thank you. Thank
That's a beautiful thing. That's a beautiful thing. And so let's jump into the tax thing a little bit. And so last year, COVID hit us hard. It kind of changed the landscape of a lot of different things. We had stimulus packages, like we've never seen before. And a lot of people have questions on how to maximize their taxes for 2021. I do understand that, of course, some people have already filed. And so my first question is, for someone who hears something in this broadcast and they say, well, whoa, I missed a deduction, or maybe I missed out on some money. Are they able to go back and amend or make adjustments? And are you able to help them with that?
Yeah, definitely. You can always go back and amend your returns once you have filed them if you find anything incorrect. Um, as a matter of fact, I just had a client today just forgot to give me something. And so this is actually the first year, not that everyone should just bum rush with amendments, but this is the first year that the IRS is actually allowing amendments to be done online through e-filing. Whereas before
Okay.
you have to mail them in and they could take 4 to 6 months. So maybe they anticipated there was going to be a whole bunch of amendments, but
Right.
to be able to just do that online and e-file it. Now your states are different, but the IRS is allowing e-filing amendments, so there will definitely be probably a lot of those.
Good to know. Good to know. So for those of you that are tuning in, make sure you have your pen and your pad or your notebook on your phone or something to take notes in case you get a gem here and you realize that maybe you missed out on a deduction and there's some extra money that's there for you and your family. So how long have you been doing tax services?
I have technically been in business. It'll be 7 years in July. So I'm
Congratulations.
plan on celebrating real big this year. And then overall, I have been doing taxes for over 20 years. Taxes is my first love, although the business has grown and acquired numerous other services. But the beginning, that baseline was all about tax preparation.
That's awesome. So did you start off working for like a H&R Block or Liberty Tax or something? How did you get your start?
Oh my gosh. So actually, no, that goes a little bit about my with my story. And that is just I was in corporate America for 18 years. I worked for the local utility. And I had a life-changing experience for the most part. My husband passed away, be 8 years last month actually. And when he passed,
Sorry
it
to
just
hear that.
yeah, thank you. I had a just a different perspective on life, and what really mattered. And at that time, corporate job just I didn't feel real appreciated, and so
Right.
I wanted to do something else on my own and to be able to spend more time with my children, have much more free time and that sort of thing.
Yeah.
And I heard a statement. And the statement was, as I was trying to figure out what was I going to do, what could I go into business for? Um, and the statement was, where you find your passion, you'll find your
Mm,
purpose. And so as I did some
okay.
self-evaluating, they said, well, what is it that you do right now that you do for free or that you can do for hours and lose yourself in it? Well, there was two things about that. And so I realized I had been doing taxes for free for family members and friends. And, I said, well, how much can we pay? Well, hey, fix me dinner, bake me a pie. I just wanted food in exchange, for my services because it was fun. It was like a hobby to me. And then, the other thing was the money management part. I've always been a budgeter, always been, real frugal about my spending, that sort of thing, and kept a budget sheet. And that was the thing that I could do for hours. And so I realized that if I can help others manage their money better and their households, then I would have fun literally doing what is now work. And that is still how I feel about it today. I enjoy taxes. I enjoy money management. It's just like, it's like a little puzzle. But I did not start off working with any tax companies or any of that. I literally started doing taxes on my own from the love of math and numbers, and then just decided to start a business doing it. And all the rest is history.
It's history.
Yeah.
That's a beautiful story. That's a beautiful story. So first off, definitely want to give you, condolences for the loss of your husband. I know I couldn't imagine that. And so definitely sending my condolences to you and your family. Secondly, congratulations, because the average business does not last 7 years. And so you're doing something right.
Yep.
When a business lasts, in my opinion, it usually lends to customer service. So it sounds like you're taking good care of your clients, and they keep coming back. And so that's a great
My
thing.
mentor told me early on, it's all about relationship. And
Absolutely.
and in the business of finance, not just relationship, but it's also about trust. And I realized that a long time ago is that I have to build trust with my clients. And so I really focus on that. So they trust, what I advise them to do in whatever financial aspect I'm working with them in.
That's beautiful, beautiful. And then also, last thing I wanted to, just commend you for persevering through. Being a single mother, I love the fact that you pulled your son into the business early. That's a beautiful thing. What prompted you to do that? How old is Michael, if you don't mind me asking?
He's 17. He'll be 18. 2 months from now?
Okay.
Yep, he's about to graduate. He's almost leaving me behind, but headed to college with an entrepreneurial spirit. So I told him, I said, you'll be doing taxes in the dorm, because there'll be a lot of his, his college student peers who will be looking for someone to do their tax preparation away at school, and he'll be able to do that and start his own.
Michael, when I was your age, I worked at JCPenney outlet, and I think I made $7.25 an hour, if I remember correctly. And so your mom has you on the right path. If you make good decisions, you make wise decisions, you're gonna have a great life, and you have a beautiful support system. And so stay there for your mom. Stay there for your mom. So OCD Financial.
Go ahead.
What's that?
I was just going to share that when you asked just what prompted it all, it was his own desire to work. When he was 14, he wanted a job, and he kept asking, could he go to, to the movie theater, or could he go to, McDonald's? Everywhere he see a hiring sign, he was like, well, I want to put it. And I'm like, you're too young. They're not going to hire you until you're at least 16 years old. And so I do that, at the time, he's a little math geek himself, just like myself. So he loves math, and he's got a great memory. He loves history. So I just, I was in a couple, during then I was thinking about hiring an intern. And so that's why I was like, you know what? I have an intern right here in my house. So I just sat down and just trained them, and was like, we're going to start from scratch. And I'm explaining to you what deductions are, and the income, and what the W-2 means, and what it's made up of. And he just caught right on. And so now the tax returns, they feed through him. And then, the larger ones, the more extensive ones, I do myself. And then, just check what he does and send them on.
That is awesome. That is awesome. So OCD Financial. The only OCD I know as an acronym is obsessive compulsive disorder. And so is that what it stands for?
It does, in a sense. It's twofold.
Okay.
What it actually stands for in the business is obedience, character, and discipline. And those are the three principles that I believe it takes to have financial freedom, right? And so those are broken down into the different aspects of finance. the flip side to that is just kind of part of my personal story is that I have always been a perfectionist, have always been, that neat freak, that sort of thing, all the things that come with being OCD. But people joke about that kind of thing all the time. Oh, I'm OCD. I'm OCD. It wasn't until therapy during my grief therapy over my husband, that while I was going to therapy is when I was actually diagnosed as being OCD. So I do literally have obsessive compulsive disorder, but it came out as a result of me trying to explain to them why his death was so traumatic to me. And so then all kind of in the same way, timing wise, is when the business came to fruition. And so it was really a divine situation in the naming of my business. But now I just kind of, use what some would consider a weakness as a strength. And so now I say, well, what better person would you want to handle your money or your accounting or your bookkeeping or your taxes than someone who is OCD?
That's exactly what I was going to say. So listen, people, if you have taxes that need to be filed or an amendment that needs to be made, Ms. Hall here, OCD Financial, and Michael would definitely be a good fit for your situation. So let's get into the actual nuts and bolts of it. We already got some questions coming in. The first question is from Ms. Tova Tanner. How you doing, Tova? Thanks for tuning in. She asked, do you utilize kitty tax? I'm not familiar with that. What is that?
Yeah, are you she probably just need to clarify for me as well.
Okay.
Unless she's just referring to the young people who do their taxes. I do advise parents and how teenagers should file and how they should fill out their W-4s when they are getting jobs and becoming employed, that sort of thing. But anything around any sort of kid taxes that are dealing with estate planning or that sort of thing, then no, I don't.
And what are the rules for that a little bit for, someone who has children, maybe they're self-employed and they want to integrate them into the business? What does that look like from a tax perspective? Are there any special breaks or considerations in that case?
Definitely.
Okay.
So it's kind of twofold. So what I meant by advising parents when their teenagers start to work is we know that each year the standard deduction number changes according to inflation. So that's always the minimum amount that you need to have made in wages for a person to have to even be required to file taxes. And so this year it's 12.2. So it's $12,200. So if anybody goes and has a W-2, you can have 4 or 5 jobs. If your W-2 income adds up to less than $12,200, you are not required to file a return. Okay. The only reason you would file a return is if you had withholding come out, which makes it you're due back all of that withholding that you had withheld while you were working because you made less than 12.2. So you can guarantee you're going to get all of that back because you don't have to start paying taxes until you've reached that. Well, there's many teenagers who go get jobs. They go get part-time jobs where maybe they only make $5,000, $6,000 in that year. But when they fill out their W-4, instead of marking it as exempt so that they don't have any withholding, they will just mark it and there'll still be taxes come out. And then at the end of the year, they don't have to file, but they want to file because they want that refund money back. And what happens is if you have a teenager that maybe had $200, $300 withheld, and then it costs for tax preparation. So they wind up spending their tax refund on the preparation costs just to get it done. So instead, I tell my clients who have teenagers or who are working a part-time job, when they fill out their W-4, put their W-4 as exempt when you don't want anything to come out. And then when they get those W-2s at the end of the year, you don't have to do anything with them. Tax preparation.
Good information. Yep. Good information. So under 12,200, you're not required to file. And when a child gets a job, he should, if you anticipate that he'll make less than that, he needs to go ahead and just mark exempt. That's so he can get his whole paycheck versus
That's
having to go back and file and pay it. Okay,
That's
makes
right.
sense. Makes sense.
That's right.
Now, what about someone who has a W-2 and maybe because I've heard people doing this intentionally,
Yeah.
where they will have them take out more for a part of the year and less for a part of the year. I'm not quite familiar with that. I've been 1099 for so long, but what does that look like?
So technically, I don't want to call it a game, but
Okay.
once you learn enough about how it works, then yes, some people do that. Okay. So what they're doing is they're electing to basically withhold, to keep all of their money, to get more back on their paychecks, to bring more money home, and then for whatever purpose, right? Especially if you get like a bonus check or something, you don't want all those taxes to come out. So people will change their exemptions, what used to be exemptions, because now there's not an exemption system anymore. But what they used to do was change their exemptions so that they could bring home more, and then towards the latter of the year, they would go ahead and change them back. Well, what happens is a lot of times is when they do that, we get spoiled and we like bringing home more, and we either forget to change it back or we just leave it like that the whole year. And then when tax season comes, people owe an abundance. So rather they were putting into the withholding all year long, they basically held it to one big lump sum. But you have to know there's extra fees and penalties for withholding that, from not paying it all year long. And the IRS is hip to that. So when they catch people who do that and haven't paid enough throughout the year, they will actually put a restriction. They will send a letter to your job and tell your HR department not to let you change your W-4 anymore, and you can't even change it voluntarily anymore. So they catch up with that.
Interesting.
Yep.
Okay. So we got another question, and this is related to the children's and taxes. Have you ever paid your child through your business?
So yeah, so definitely. So that was the flip side of hiring your child, right? And so yes, so I actually pay my son just like an employee. He's on payroll. And then my daughter is 12, and so she's also on payroll.
Is there a certain age for that? Do they have to be a certain age?
Every state has different child labor laws. So it's dependent upon the state. So when it comes to paying them, so I put them both on payroll for part of that, for obviously for Michael to help me do taxes and for the tax breaks. So I did actually give my daughter a title and a job. So she is director of document processing. In layman's terms, she is my shredder. She shreds all my documents and she scans my documents. So she does have a job. She just got a fancy title, but it's in order for me to be able to give her a wage and to pay her as well. The benefits of that is depending on what type of business you have. Okay, so when you have a single member LLC, which is what my business entity is for my business, you can't pay yourself. So as the owner of a single member LLC, you cannot put yourself on payroll. Okay, so those are kind of like business rules in a sense, but all the money that you withhold or that you pay yourself in a single member LLC, the money that you pay yourself, it's all part of your income. So they're just draws. They're called owner's draws. It's just part of the equity in the company. But you can have employees on payroll. So just like any other company, when you pay someone, that's an expense. Payroll is an expense, right? Well, the IRS allows, if you have a sole proprietorship or an LLC, you can hire your children the same as you would any other employee. The benefit in it is that your children are exempt from FICA and Social Security taxes. So,
Okay.
so they literally will get their entire check with nothing withheld. And that's actually
And that money's going back in the house.
That's right. That's right.
Possible. Okay. Okay. That's interesting. So I need my little ones to grow up and hurry up.
Exactly. Give them something to do. Give them something to
Give them
do.
a job.
That's right.
Definitely.
You can actually,
Okay.
it becomes an actual expense when you do your business taxes.
Beautiful. So since we're on the business taxes, let's kind of stay on that vein. Do you do business filings for people who are looking to set up like a LLC or anything like that? I noticed you have a list of services.
Yeah.
Okay.
Yep. So I do business setup, but only for the LLC. So I do business setup for LLCs, and that would include getting their EIN number if they're still needing one, setting up their LLCs with the state of Missouri or the state of Kansas, and then providing a operating agreement as well in that package.
Got it. I've got someone I need to send to you. Remind me after this.
We'll do.
Good deal. Okay. All right. You are it, Miss Hall. You are it. You are it.
I
Okay.
said
So so for those who are self-employed, are there any special considerations that people should be looking out for when they file this year versus previous years based on COVID, stimulus, any of that, any changes that we should be aware of?
So most of your additional tax deductions that have come through with the, with the CARES Act and the new bills and that sort of thing, those are all going to pertain to any individual. So, so when I am speaking from a business tax perspective, I am always speaking from a sole proprietor or a single member LLC perspective, because that's the businesses that I do taxes for.
Okay.
LLCs who file as S corps are treated as corporations, or partnership LLCs where the taxes are done separately. I don't particularly prepare those taxes. However, I always just give a referral to some of my other accountant partners who do those. But as far as the tax deductions that have been passed with the stimulus and that sort of thing in those packages, those are pertaining pretty much to everybody as an individual. So those that are self-employed who need to include a Schedule C on their within their taxes, where they have a pass, where their business is considered pass-through entity because you file your business taxes with your personal taxes on the 1040. Nothing so much changed about what you're going to do on your Schedule C. All of those tax deductions are applied to kind of everyone. So the stimulus is across the board to everyone, whether you're W-2, 1099, certain deductions on your Schedule A, those are for everyone. Your Schedule C is really just going to be where your income lies, where you're going to put your income and expenses for your business to feed through to get those same deductions that everybody else is getting.
Got it. So as far as business owners, stimulus and taxes, there's really nothing different there. It's going to apply the same to everyone based on their individual situation, basically.
That's right. That's right. So yeah, so there's many changes going forth, whether we're talking about the recovery care, where you are trying to get your stimulus 1 and stimulus 2 that you may not have gotten before. Okay, if you didn't get stimulus 1 and stimulus 2, you can still get those now when you file your 2020 tax returns. That's the way to get them now, but you have to file your 2020. But see, that applies to everybody. I believe just last Friday, they passed part of the bill about being able to not tax federally up to $10,200 of your unemployment if you received unemployment. But see, that's on the main part of your return, not specific to if you're self-employed or not. That's for everybody.
see.
So those sort of, so a
Okay.
lot of those deductions that you can, write off in addition. This year is the first time that you can actually write off a little bit of your charitable giving, even if you took the standard deduction. So before you had to itemize and write off your things individual and itemize to be able to write off, your charitable giving. Well, this year they kind of gave a little break. The maximum's $300, but at least you can still get something towards your giving, even if you took the standard deduction. Yeah, so there's some tax breaks, in there. And it apparently there's a few that continue to evolve, which is part of the issue with the whole unemployment thing, because there's a lot of people who have already filed already, and now that deduction comes out, or that tax savings. So they're actually saying if you did file already, don't go and do your amendment just yet, but they are giving instruction for those going forward how not to include that $10,000 worth of unemployment. And then when instructions come out later, then they'll tell how those can go back and fix theirs. Yeah, so it's totally, so it's continuously changing and evolving during tax season.
Now, I saw at one point they were talking about extending the tax deadline this year. Have you got any news or information on that?
Yes, I've seen an article on the fact that they're considering it. However, it just has not been confirmed or, decided upon. I kind of have mixed feelings about that, just based on, like last year was great. They extended it. Okay, fine. And I understand that it helps out a lot of people. I think the only downside to that is just that sometimes it appears that if you extend the tax season, then people will just wait and procrastinate just because they can.
Okay.
So I always tell people, some people just wait just because. And it's like, don't wait. Don't file unnecessary extensions. If you have all of your W-2s, if you have all of your paperwork and your documents to file, go ahead and just get it done. Because if you, and even if you think you're going to owe, don't let that be your reason to not file or to wait to file just because you think you're going to owe, because that doesn't help you at all. Because what you owe still starts to accumulate interest and penalties from the day it's due, which is by the 15th. So you're not helping or saving yourself any money by not filing when you owe at all. So it doesn't work that way. So you might as well just go ahead and file and then let them know that, hey, I know I owe, but I filed anyway. At least you've avoided that penalty, that late filing penalty.
Got it. So we got a comment here from Melvin Brown. He said that you're really helping the people. People need to be enlightened on how this works. Many are scared. He said you're doing a splendid job, and I agree with him. I agree. We also got a comment here. It says, can you explore more details about single member LLC and payroll? It sounds like there's a big difference between being a sole proprietor and being on the payroll as well. Can you speak to that a little bit, just really quick?
Yeah, definitely. So, so in the eyes of the IRS, a sole proprietor and an LLC is the same thing. The IRS on a federal level does not differentiate an LLC. An LLC is a business entity according to the state on the state level. So when they call that a disregarded entity. So the IRS calls sole proprietors disregarded entities because your taxes are filed within your personal taxes on your 1040, okay? When an IRS speaks of a disregarded entity, they're talking about a sole proprietorship or an LLC because they're filed just the same. All right. So, so even when I talk about the payroll law that's out there, I don't know the publication by heart, but anyway, I want to say it's like 512, something like that. Don't quote me. But anyway, the publication that talks about payroll for your children being employed by you, it considers a sole proprietorship and an LLC the same thing, a single member LLC. Okay. Because once you're getting into two members of the LLC, we're talking about a partnership now, which is handled differently. So as far as that's concerned, it's the same thing. Now, as far as paying yourself, when you are a sole proprietor or an LLC, because it is considered to be just that, a pass-through entity, which means that your income from the business is literally passing through your individual taxes. So it's all together. Every dollar you make in revenue and income, it belongs to you. Okay. So if you made 50 grand in your business as your revenue, your gross revenue, then that is the income that's going on your Schedule C. That if you never spent any expenses out of that, then your net profit is going to be 50 grand. And that's the 50 grand that's going to go on your tax return. And that's the 50 grand you're going to have to pay self-employed taxes on.
Got it.
So that's what. So with a single member LLC and a sole proprietor, you do not pay. That's why you don't pay yourself payroll, because all your revenue belongs to you.
Thanks for addressing that. You explained that well. That makes sense. So for people who are looking to maximize their return, what are the top deductions that you've seen in your years of experience that people tend to miss?
Ooh, well, the irony in that statement about missing them is it's almost hard to miss some of the write-offs now because of how the tax bill changed almost 8 years ago. So if you remember when the tax structure changed, once a time, it used to be not that it isn't anymore, but you probably can recall it was a big deal. One of the benefits of being a homeowner was to be able to write it off on your taxes and to be able to itemize, because you could write off that mortgage interest and the property taxes and all that. Well, that's when the standard deduction was low and half of what it is now. So if you could write off all those things, you could deduct more from your income and bring your taxable income down. Well, when the tax structure changed and that bill was passed, which will be up, I think, in 2025, when that changed and increased the standard deduction and pretty much doubled it. So it used to be like $6,000 for a single person. Now it's $12,200. Or now it's, $24,400 for the married couple. Well, even for a married couple these days, even when you add up your mortgage interest and your property tax and your giving and, those sort of things that you can write off on your Schedule A, they still don't calculate to more than the 24,400. So I say that to say that a lot of people are just taking the standard, because now the standard is more than what their itemization even adds up to. So when you ask about what are they forgetting, well, now people are trying to gather all they can to itemize, only to be like, you still don't have enough. So that's why I tell my clients, I'm like, hey, just give me all your stuff anyway. Let me add it up, and then I'll tell you whether or not you qualify. But most people obviously remember their children. They never forget child tax credit. So no one forgets the kids. Most people always remember their charitable giving. If they have a home, no one ever forgets their mortgage interest. Sometimes I have to remind my clients about the property taxes on their cars. Just like you can write off the property, the real estate taxes on your house, you can write off the property taxes on your car. That's still another form of taxes.
Now, I know when I can share, with myself, my accountant always gets on to me as being a business owner. I'm horrible with keeping receipts and gas mileage.
Oh, well, definitely.
Car mileage and things like that.
Definitely. Yeah. So,
I'm not the only one.
Yeah, no, definitely. Now, and this is another service I provide. If you're ready to kind of go that direction, when you talk about receipts, So one of my other services that that has really, really grown, it's one of the ones I actually enjoy just as much now, and that is I work with small businesses on setting up their accounting system and creating a much more efficient accounting system than whatever they're using now. So,
Okay.
and also encouraging them to create an accounting system that will grow with you. All right. And what I mean by that is I'm very selective on the business clients, tax clients that I get. And
Okay.
so I always tell new clients that what I will not take are shoebox clients. And so by shoebox clients, those are those clients that come to me with a bunch of receipts
Mm-hmm.
in a
Mm-hmm.
bag, in with paper clips or whatever the case may be. So I
Right.
always say, hey, I don't work with shoebox clients, but what I will do is I will work with you to automate your system to help you be more efficient with your expense tracking, and then I'll do your taxes next year.
So do
So
you recommend like a QuickBooks or something like that?
exactly. So yeah,
QuickBooks.
yeah. So I am a QuickBooks certified pro advisor, and so I do setup, cleanup, and support and training with the QuickBooks software. So that is exactly what I do and train small business owners how to use QuickBooks. I'll set it all up, sync all their business accounts to it. So then everything becomes electronic, it becomes automated, and your receipts. Then if you lose a receipt, it's really, I'm going to say, not a big deal in the most part, but your receipts only become usage for two things. Because now
Okay.
when you do your taxes, everything you did through your bank account that you had a receipt for is now in QuickBooks. So your receipts are now only for auditing purposes. If the IRS were ever to audit you and you needed to prove it with the receipt, or if you need to get a refund back at the store. But
So you
outside of
keep that shoebox at your house. Don't bring it to the tax
that's
office.
right. That's right. So once you are automated inside of QuickBooks, it is literally a matter of pushing a button at the end of the year, printing
Okay.
off your P&L, and providing that to your tax preparer, because that's really what your Schedule C is. It's just a replica of your profit and loss sheet.
So for the independent contractors that drive a lot of miles, whether it be like a Uber Eats or DoorDash or something along those lines, what is the better deduction? Is it the gas or the mileage?
So it depends. Now, when you talk about those, the independent contractors, if I am not mistaken, I believe like the Lyfts and the Ubers,
Mhm.
they uh, they are given their mileage some sort of way. Like they get this
Uh-huh.
receipt thing at the end of the year that shows like the jobs they had.
I see.
But there's something included where they don't have to calculate it themselves. But for others who do have to calculate it, it depends on, it just depends. I have seen that mileage is not only the easier of the methods,
Mhm.
but but it is also it appears to pan out as having the most. So that's what it comes down to. It's you don't just guess at it, it's which one is more. So you're either doing the actual or your mileage. So actual expenses are when you add up the gas and the oil change and the tires and all that old stuff to the for the vehicle. But at the end of the day, even to take the actuals, you still have to keep track of your mileage, especially if it's a car that you do that you use for personal and business. So that's when it gets kind of messy as far as tracking it when you use that same car for business trips as you do for personal, because you still have to keep track of your mileage either way.
Makes sense. That makes sense. Okay. Man, it's a lot of good information. I'm taking notes. Make sure I don't miss anything. So I appreciate that. I appreciate that. Um, Small or home office deduction. Any changes there, or is it still the same?
Yep. So it's still the same. And the home office deduction, I will answer the the big elephant in the room question, and that is, since a lot of us during COVID are now work from home, those who are W-2'd and are paid by their employers, the home office the home office deduction is not a deduction for them. The home office deduction is pertaining to the business owner, who can write off that space as an office that they use for their business. A lot of those extra deductions that used to be on the Schedule A for employees is no longer there, but the business owner can write those off. And the way that it works for home office write-off is the exact same way, in a sense, as mileage works. Okay, so it comes down to, you either take the actual, or you take, or what they would call the long version, or you take the short version, or the short method, I should call it, the long method or the short method. So it works the exact same. So you either keep track of all of your bills, and then you multiply by how much square footage of the house you use for the business. And then you multiply that by, that's how much of the bills you get to write off, that percentage. So the same percentage of your house that you use for the office, you get to write that same amount of percentage off of the bills. The mileage works the exact same way. So that's why I say, either you take, even if you take the actual for your mileage expenses, you still have to keep track of your mileage to know how much you can write off of those actual expenses for your vehicle. So if you drive the car 50,000 miles a year, ooh, that's high. If you drive 15,000 miles a year, 5,000 of those are business, but 10,000 are personal. Then if you took the mileage, you would just take the 5,000 miles and multiply it by whatever the mileage rate is for the year. If you wanted to take the actual, you still have to know that 5,000 miles is a third of the whole 50,000. And then you add up all the things that you spent on the car, the gas, the oil change, all that, and then you multiply by the same third. So you don't get to just choose and say, I'm just going to write off all of my gas. You only get to write off the percentage of the gas, which is the same percentage of what was business that you drove the car. So either way you go, you still got to keep track of the mileage.
Got it. So now, there are a lot of people, right. There's a lot of people that started businesses within this time. I remember when I first started in my business, I didn't really know anything about, taxes and all that. I started getting all these 1099s from different insurance companies, and I was shocked, when I got my first tax bill and all of that. For someone who maybe has fallen behind on their taxes, what does that road to redemption, kind of look like? If you haven't filed in a couple of years, are you able to help with that?
Oh, definitely. And that's one of the other things that I can honestly say that I pride myself on in my business. So whether it is around the subject of taxes, to your question, or it's around money management, or it's around credit, my business is based on a no judgment zone. So whatever the situation is, if you 3-4 years behind, I just want you to get it right. I just want you to get caught up so that you can, get that burden off your back. So you can stop worrying about, are you going to get a letter in the mail? I'm 3-4 years behind. And I need people to understand that it's not just you. You're not the only one. So when people realize that, they don't have to keep feeling shame about it or that sort of thing, just go ahead and put it all on the table. That's what I say. Make up your mind that you don't want to worry about that anymore. I want to get my taxes straight and I'm ready to face it. So whatever the amount is that you owe, come on forward with it so we can know what that is. Sometimes we're just afraid of the unknown. So let's just go ahead and be fearless and find out what the number is. Let's get it caught up, and then let's make a payment arrangement if you need it. but the wondering is what keeps people afraid. So definitely, I do prior year returns. I've done 8 years at one time because
Wow.
she had not filed in that long, but she finally made her mind up. And so they're not the only one. So just face it and say, this is my year that I get my taxes caught up. And so if you have missing W-2s, I can find out what all income you had. So, tax professionals are able to contact the IRS to get all your back history and to find out, who paid you. If you had 6 jobs, we can find out all 6 of those jobs, all these years, and bring you all current.
Beautiful, beautiful. If you're giving up this much information just in a free live stream, I can only imagine the type of service and education that you give for your clients. And so I definitely appreciate that. You have a whole list of other services that you do. How can people get in contact with you?
I am on social media as well as web page, phone. I'm at ocdfinancial.com. Everything's tagged with the same. And so ocdfinancial.com on Facebook. My page is OCD Financial. On Instagram, I am OCD_financial. I think I'm on Twitter with maybe 1 follower. Don't go there looking for me. I am on LinkedIn. My contact number is 816-423-9023. And you can always call us on that line. You can reach us there, or you can always go to the website and send an inquiry through the website. It'll come to us. And then you can always email us at info@ocdfinancial.com.
Perfect. And I just put all that information in the chat.
Oh,
and
cool.
so if anyone needs to reach out to Ms. Hall, just go ahead and check out the chat. The information is there. And just a couple more questions. So people are getting back tons of money. I know people that get, $5,000, $6,000, $7,000 for their tax return alone. And then you have the stimulus package on top of that. And so I'm hearing reports of people getting $10,000, $15,000. I mean, these astronomical numbers. From a mentorship perspective, what would you suggest someone does with a refund of that amount?
Right. So first, I would say if they're getting that large returns back due to the stimulus, then that's great, because that was extra. There was nothing that you could have prepared for on your W-4 or planning for that amount of money back. The reason I say that is because if you are getting a refund that large, because that's how much your refund was, and your refund was a big, large portion, then there's some more education around why you should not be getting a refund that large, why you do not want a refund that large, because refunds are not the goal. We were taught growing up that tax season was a holiday and refunds were Christmas gifts. That is not.
Yes, people say it's time to catch up. Oh, this is a chance to catch up. But if you would have been getting the money all year, you never would have got behind.
You got it.
Right.
And so, and by doing that, all you have allowed is for the IRS to hang on to your no interest savings account all year long. That's a whole nother story, right? But in this season, with the larger refunds, if they are due to the stimulus money and that sort of thing, and it wasn't because your money was held all year, then I advise people a couple of things. First of all, don't run out and spend it on unnecessary things. So don't use this like don't use it like you just won the lottery. Okay.
Right.
And then take some time to strategize with the money that you just got. Think about what you're going to use it for. Contrary to what some might think, It's not even about running out and paying all your bills all of a sudden. Don't go pay all your bills and then leave yourself with nothing. Use this as a time to maximize on this financial opportunity that you just got. So I say pay some things, pay some, save some. Use this as an opportunity to put you up a little emergency fund to the side. Invest it. Maybe you don't invest it all. Maybe you invest some of it for long-term savings so that your money can make money for you, or put some of it just in a right now savings bucket. So emergency short-term type savings. Many things that you can do with it. Start that business that you were thinking about. Take a class before you go start the business. Take a business class to learn about whether the business you want to start is feasible or not. If it's worth you starting, instead of going and dump a whole bunch of money into a new business, that sort of thing. Invest in the business that you want to start. Get the financial portion set up correctly so that you're not having to be retroactive, and that sort of thing. So there's many things that you can use the stimulus money for, other than just running out and spending, the whole thing all at one time. But the biggest thing is strategize about it. Strategize, think about what you can spend it on that's going to be beneficial for you and your family.
Great advice. Great advice. We appreciate that. And then just kind of last question on the taxes. And so, we see H&R Block and Liberty Tax and all these different chain, offices. What's the difference between working with H&R Block versus you with OCD Financial?
The biggest deal is sometimes I hashtag this on my post a lot. And that is OCD Financial is not just tax preparation. I am tax preparation and education. So you said it just right. I have a love for educating, and especially in the area of finances. One of my missions in the business is to make sure that I educate my clients so that they can create a much more effective money habits around those three principles of being obedient, of being having character with your money, and being disciplined. And that comes across even when they are getting their taxes with me. You won't just drop your taxes off with me. This is how I tease the chains. I say people go to the chains and they drop their taxes off, or they go in there with their fingers crossed, and all they want is not to owe. That's all they praying about, is not to owe. I don't want to owe. And then they tell you that you don't owe, or that you do, and you're just happy about it. If you're getting a refund, you walk out and that's it. But nobody's taking the time to educate you on what just transpired, what they did for you, asking you, those extra questions. That's not even built in. So when my clients come to me, they're being educated from the beginning to the end, and I'm working with them on the end too, with a bit of tax planning. And what that is basically whether you owe or you're getting a refund, we're going to talk about it. Because just like I said, if you got a big fat refund, I'm not happy for you. And so we need to talk about how we need to change that. And if you owe a whole bunch, then I'm not happy along with you, because you're not happy, and I'm sad for you because I got to break the news. So now I want to have a conversation with you about how we're going to fix that. And so one of the biggest joys that I get out of my clients is just seeing their whole perception of tax season change. Those who have owed for years and no one sat down to explain to them how to fix it. And now they're within that $300 plus or minus range because we fixed it. Right. And now they're one of my first people, to come and bring their taxes, because they don't hesitate now. It's not as scary as it used to be.
That's good. I agree with you wholeheartedly on the education piece. There's a big difference in any business or industry when you work with a national chain and you're dealing with an employee who's, getting, a living wage, if that. There's just a different level of commitment. There's a different level of service. There's a different level of education. You always come out better dealing with a small business owner in your community. I tell people that with life insurance all the time. You can call, any company over the phone, but you're not going to get the same level of service. It's just impossible for them to do that versus working with someone here locally. And so, yeah, definitely agree with that. Michael, I know you've been sitting over there quietly, kind of listening and everything, but we got a comment here from Mr. Melvin Brown, and he said he thinks it's fascinating how Ryonda has her family working alongside her. You don't find that often these days. Most children desire to do their own thing instead of following suit behind their parents. What do you say to that, Michael?
Yeah, I mean that what he said is very truthful. A lot of teenagers kind of want to be independent, kind of want to be their own, kind of grow up too fast. And I think that especially with the job that my mom has taken up over the years, me watching her, all the dedication and commitment that she put into this, seeing that's something that she really cares about and really works for, and her work ethic towards it, seeing how she communicates with people, and how she loves to help them, how she just loves on them, period. I just like that, just seeing that, growing up, it's a great thing to learn and pick up on, especially me growing up and moving on, going to college and growing up as a young man. I just think it's a great opportunity, to learn something that could be really beneficial for the rest of my life.
Man, that's awesome. I'm excited to see what you do in the future. I really am. Your mother's doing a great job, and starting doing what you're doing at your age, the sky's the limit for you. And so just stay focused and stay dedicated. You're gonna have a great life. You're gonna have a great life. But Miss Hall, I didn't want to take up too much of your time. I know this is right smack dab in the middle of tax season. You got other things to do, but I appreciate you. Thank you so much for providing this great information for our audience. The replay is going to be on the A.L. Johnson Life Insurance Agency Facebook page, as well as the YouTube channel. And so if you missed any part of this, you can go back and catch the replay. Any last words or final thoughts or tips?
Again, I would just say, hey, tax season, it is what it is. Don't procrastinate, get it done. And again, to those who may be behind, this is the season for you to get caught up. And what I mean by that is, for those who were within the income guidelines, you can see now that without your taxes being done, you have missed out on multiple stimulus checks. And I say, hey, if you don't care and you don't need it, more power to you. But this is the season for you to get caught up with your taxes. And that's the incentive in itself. And to be honest, if you will go ahead and get your taxes caught up, you can use the stimulus money to put forth some of those balances that you may have owed from prior years. So take advantage of it just because of that. Get the free money to pay back to the IRS so you can get out of whatever hole you might be in. But this is your season to get caught up.
Definitely. And a lot of people missed out on the PPP loans from not having their business structured properly in bank accounts. And so that's
right.
Also something that Ms. Hall can help you out with, is your business filing for a single member LLC. And so reach out to Ms. Hall. Her information is in the comments. Again, the replay will be on both YouTube and on the Facebook page. We appreciate all of you for tuning in. Thanks for joining us. Have a good evening.
Thank you.